go into a couple of things, and thank you for coming on the show. I met you just recently over social media, which is a great tool for meeting people. I have this campaign I've been wanting to talk about to the audience, and we'll go into details about that. But first, let me go ahead and give Ben an opportunity to get on and tell us a little bit about his background and how he got into real estate, and we'll go forward from there about the evolution of what you're becoming and where you want to go. So go ahead.
Okay. Well, thanks for having me on the show. I really appreciate it. I'm currently residing here in Wichita, Kansas, one of those flyover states, but the real estate market here is fantastic. I was brought here while I was on active duty, and I knew that I was going to be separating and going into the reserves. So we decided that this was where I was going to build my business. And I got hooked up with a buyer because at the time I was only doing wholesaling, and I got hooked up with my now current business partner. He was my best buyer for my deals, and we decided that, hey, let's go into business together. And our joint venture turned into a partnership of an LLC, and we find properties to flip, we find properties to wholesale. We've got about 70 doors in the portfolio right now. And in order for us to do that, we have about 1.5 million in private money just waiting to be deployed. And at any given time, like right now, we have 5 flips in progress, 3 of which are funded by private lenders.
That's amazing. I think you had mentioned that you have around 7 to 9 people, and you used a term that I hadn't heard before. You call them people with lazy money. So
Yeah.
it's people that want to, like you said, deploy their capital into real estate, but there's a process. First, they have to know you, like you, and trust you.
Fact.
So tell us a little bit about how you develop your relationship with your private money and why they trust you so that they can put it into real estate.
Okay, that's a very, very fair question. I go to a lot of networking events,
Yeah.
and I'm constantly involving myself in the social aspects of Wichita. I don't do so much of the marketing on Facebook because I don't want to run afoul of the SEC. I can't go solicit for money on social media. The SEC doesn't like that, and I don't want to be on their bad side. So I go to private events, and it starts with a handshake and an introduction. And I have perfected my elevator speech so that within 20 to 30 seconds of them meeting me, they know exactly what I do. I raise private capital to invest in real estate, and I pay people double-digit returns for using their money. Their money is secured through a mortgage, and then the conversation just goes from there. So the really big thing is actually getting out there and meeting people. And I don't know from the beginning of the conversation who has private money, who has lazy money, if they're going to be a good fit for us. But it all starts with that first conversation. And so after that, maybe I'll take them out to lunch, and we'll have a discussion about what their money is currently doing. And a lot of people are really afraid of the stock market right now because it just keeps going up and up, and it's starting to level off. And then they're just waiting for the other shoe to drop. And so I've met 3 or 4 people in the past month that have completely pulled all their monies out of the stock market. They're invested in high yield bonds, or they're just sitting in their checking account waiting for the next thing to invest in. So once I find out that their money is not working for them as it sits, then we can start having a discussion as to how the other ways that they can get their money to work for them and start earning money while they sleep. And naturally, this conversation evolves into real estate. And I hear it every time I sit down with somebody. They're like, oh, I've always wanted to get into real estate. I just don't know anything about it. And I'm like, well, that's awesome, because I love real estate. I live, eat, breathe, sleep, dream real estate. I know it. I'm not going to say I know everything, but I know enough to have this pool of people that have already invested with us and are very happy with what we do. Would you like to learn more? And then if they say yes, then we set another appointment. And so over time, we build this relationship of trust. And I tell them exactly the deals that I've made money on, the deals where I've lost money, but my investors still get it. My investors never lose money. That's the other thing. I have a story from 2 years ago where I lost $6,000 on a deal, but my private lender got everything that was promised per our agreement. And then he came back to me a couple weeks later and said, "Hey, if I were to throw an extra 100,000 your way, would we be able to do something a little bit better for you?" And it's just that trust of being genuine, open, honest, laying all your cards out on the table. And a lot of people don't do that.
Yeah, that's crazy. In regards to you losing money on the deal, and you still went out and you paid your private money lender back, and that's not something that a lot of people will do because we all share the risk. When you offer this return to your people, do you tell them that it's guaranteed, or do you tell them, "Hey, you're joining us in the risk in this"? What is the way that you structure it?
We have a standard risk disclosure that they sign if they're going to let's say I go out and find a smoking hot deal. I'm going to need to borrow the private money to close on the property, and we do 100% purchase and rehab from our private lenders, and they understand that it can go sideways, but their risk is mitigated by the fact that we buy the properties right. We buy them so that they're no worse than a 60% loan to value position. So if I get struck by lightning, or our company gets sued into oblivion and they're stuck holding the mortgage on this property, they know they can take that mortgage to the auction, to another investor, or fix it themselves and still come out with the money that they were promised, if not more. The best thing, or I'm sorry, the worst thing that can happen is I pay them on time.
The money that you guys are borrowing, did I hear you say this correctly? You are using 100% private money to take down every aspect of it. There's no institutional lending or any other type of lending besides the private money. Do you consider that joint venture money, or is it
Mm-mm.
more of something that you just basically put a deed as a security for the lender, and that's what they have if there's any hiccups in the road?
Yeah, so it's called a collateral only non recourse loan.
Nice.
So the collateral is the property. And non recourse means he can't, if we went completely upside down, he came after me personally or my personal assets or the company's. It's a collateral only non recourse loan. And
Yeah,
so their position is secured with a note and mortgage. Our company's name goes on the title. They have first position foreclosure rights.
that sounds like a great opportunity for them, and must give them a big sense of security. A lot of times, at least in the niche that I'm involved with, because we do multifamily syndication, the people that lend money, they actually become part owners in the limited as a limited partner in one of the LLCs that partners with the general partner, which is a lot of times a separate LLC. But in your case, it sounds like they have the same type of protection because they're on title as some kind of an owner, or at least have access to the deed, or are branded on the deed. So that's fantastic. Now, you had mentioned that you have 70 doors. Are you talking about houses? Are you talking about multifamily? Tell us a little bit about your portfolio.
There's a couple of duplexes, couple of triplexes, but mostly are single family residences. My partners and I are looking to get into apartment investing, and basically doing the same thing that you just mentioned, a syndication where we would get together a group of private lenders that want to be up this deal. They help us cobble together the 20% for the down payment. The bank funds the rest. We force appreciation, and then we pay them back, and they get to stay in the LLC as equity partners in perpetuity.
That's
So that's kind of where we want to go. It's not a very viable model on a single family residence.
No, well, one, the paperwork and all the legal stuff is going to cost. It's going to be cost prohibitive to use them and create that for a small portfolio or a small house. But when you start getting into maybe like 2 million and above for properties, then it makes sense to get a lawyer involved. But
Yeah.
one of the reasons that I was so excited to talk to you is because you're evolving. You've already had a couple of duplexes. You see the benefits in multifamily, but you're not completely morphed into that 100%. I know that you're still doing some wholesaling deals, and because the market makes it very challenging to purchase these deals, that may be another reason, another indicator that it's a good time to get into multifamily. But so take us through the mindset that you have of why you want to go from what you are currently doing to get into multifamily syndication, because that's a lot of people that I'm working with are in that arena, but I don't have a chance to speak to people that are morphing or in the evolution process of that.
Yeah, I mean that's a totally valid question. Wholesaling has gotten extraordinarily tough. The deals are drying up. The every seller thinks that their house is worth a lot more than it actually is, despite logic and reason. And so in this current economy where things are good, housing market is still good, it's really tough to find that truly motivated distressed seller. And so wholesaling, while still a component of our business, we're not hanging our hat there. Um, Adding to the rental portfolio is always a goal, but we see that apartments offer the same benefits as our 70-door portfolio on one piece of property. You know, if I find a 70 unit apartment building in a B neighborhood that mom and pop have let go by the wayside, I can get in there, renovate it, re-tenant it, cut costs, and force appreciation, and still only have one parcel that needs to be managed, but 70 streams of income coming from it.
Yeah, I've talked to a few people. I just went to a real estate conference in Minneapolis this last weekend, and there were a lot of people who were asking questions like, why do you buy just one property instead of, a fourplex or multiple fourplexes? And what we kept on hearing from some of the speakers and the presenters were that it was becoming very challenging to manage all the different properties, especially if you didn't have an on-site person, and it became a lot more cost effective to have all of your tenants in one place, to have all the repairs on just one roof, not 30 roofs or 20 roofs. And the same thing for the interior of the properties, to have one construction crew going in from apartment to apartment, or as the tenants are leaving, to fix that one place. And then even outsource all of that, so that way, if somebody's water heater breaks, they're not going to be calling you to make a decision, even if it has to go through your property manager. But you can actually delegate those duties to one person that's on site that will handle it, and it's much less of a headache. And I think for those reasons, a lot of people are very interested in the multifamily arena. And it seems like it's a very on fire type of, everybody wants to get into it. It's kind of like what wholesaling was 10 years ago. Everybody wanted to
Mm-hmm.
wholesale, it was very effective, but now people are like, everybody wants to syndicate or get into multifamily or large multifamily. Your experience here in Wichita, are you finding that there's opportunities there for bigger apartment complexes, or how are you going to decide where to invest in multifamily?
So Wichita is a smaller metropolis. However, there's a lot of new builds coming up. We are, I think, adding at least 5 or 6 more apartment complexes that are brand new. So it's going to be tough to go find a rough neighborhood, or I'm sorry, a decent neighborhood rough property, and then compete with the new builds that are up and coming. I think that when we start going into that area, we're going to look nationwide. If the numbers work, then it's a good deal for us. And that's what it all boils down to: is the numbers have to be good. The numbers have to work.
Yeah, we all need to educate ourselves in regards to whatever arena that we're getting into. Are you specifically going after any particular mentors that are really good at multifamily syndication or in the multifamily arena? I actually find out that, and then ask you about how you learned to invest in real estate to begin with.
We have a couple of friends in one of our masterminds. I wouldn't exactly call them on the circuit gurus, but they've got over $100 million in assets under their control that there are various syndications on. And so we're going to sit down with them and learn what they did so that we can do the same thing. As far as mentorship in general, I got into real estate with a really bad one that was trying to get me to do illegal things with my VA loan that the government provided, which I didn't do. But then I got into a really good mentorship with Clever Investor and Cody Sperber. And so they were able to take me to the next level in my wholesaling business, going from doing 0 deals to doing 53 just last year. But they're very focused on the wholesaling. I realized that wholesaling wasn't everything that I wanted to do. I wanted to get into buy and holds. I wanted to start doing some fix and flips. So I went out and sought mentors in those specific niches. So for my buy and holds, I work with Mitch Stevens down in San Antonio. He does the sell owner finance, which is great. Basically, you create your own note and you become the bank. Doesn't work in Kansas because Kansas is a judicial foreclosure state, so we have to do a rent to own. But there's every niche has the experts, and you just got to go to where those experts are.
So you have some guys that taught you. You mentioned a gentleman named Mitch that's helping you raise private capital. Tell me about the process that he took you through and now what you're doing to raise capital.
Yeah, so basically what Mitch taught me is you've got to go where the people are that have money. And so I started looking for doctors, lawyers, CPAs. One of our best lenders is a CPA, and he opened up the doors to some of his friends that have some money that they want to put into play. And so once that word of mouth gets out there, you don't have to beat the ground as hard. But if you don't have any lenders in your stable, you've got to go to where they are. Now, you may find 1 or 2 at the Chili's on the corner, but if you've got a nice steakhouse in town where there's nothing but high-end automobiles in the parking lot, that's kind of where you want to go have a beverage. Sit at the bar, and I make it a point to tell at least one person a day what it is that I do. I give my elevator speech at least one time a day, and if you do that over a year, you've now told 365 people what it is that you do, and one of them is going to be interested in getting involved with you.
Do you tell people on social media what you do?
I do not.
So people that see you on social media don't have any idea that you're an investor, or do they know, but they just don't get advertising from you?
They know that I'm an investor because I put pictures of the projects we're working on, and I'll maybe hint at it and say, hey, the guy that funded this is going to walk away with a really happy payday. I'll just hint at that, but I don't openly say, hey, who's got money that they want to put in play? I was taught by multiple mentors that is a no-no when it comes to the SEC, and because you can't openly solicit for active deals. In fact, the people that I have as private lenders, I met them at least 3 times prior to ever pitching them on a current deal, because I wanted to establish a relationship because they're not accredited.
What's your approach? What's your mindset when you're going and talking to these people?
So yeah, if I'm out in a social area, and I always lead off with one question. I say, hey, so what do you do? And they tell me, and it's really, it's good to know, but when it comes to what you're going to say next, it's kind of inconsequential, because their inevitable response to you is, what do you do? And so that's when I give them my elevator pitch and tell them exactly what I do. And then the conversation just goes from there.
What is it that you do, Ben?
Oh, I'm glad you asked. Well, I raise private capital to invest in real estate, and we offer a double-digit rate of return for using the private money for our investments. And everything is secured with a mortgage and backed by real, tangible real estate.
That's fantastic.
And
That's
a lot of times, what happens is they say, "What?
yeah, I
What
bet.
did you just say?" And I'm like, "All right, let me break it down for you." So we find people that would like to get involved in real estate, but not necessarily be actively involved in real estate. We help them leverage their money for our investments, and we pay them double-digit rates of return for doing so. Their investment is secured by a mortgage and a note, so their investment in us is backed by a tangible, real piece of real estate. They can walk up and touch their investment.
That's a great approach. So besides the restaurant, where else have you targeted people to go meet? Do you go to?
The,
Go ahead.
yeah, sorry. The local chamber of commerce, get involved in independent business associations, um, any kind of social meetup. If you go to meetup.com, you can find a meetup for just about anything out there. And you want to find meetups. I like to go to retiree meetups. People who are just to think about retirement or have maybe just retired because their 401ks that they had with their company that they built into this giant nest egg, we can help them move it into a self-directed IRA so that they can then lend out of that. They can direct where that money goes. We do a lot of education.
I really like the idea of just going to a nice restaurant. Obviously, meetups are fantastic. Anything else that you're using to meet people?
A lot of word of mouth. Once you get two or three affluent people that have done business with you, they tell their friends and they tell their friends. So they're sitting on the golf course, about to tee off on the sixth tee, and they start talking about money. And then they start talking about what they're doing with their money. And then your name comes up. And then you get a phone call and some guy says, "Hey, I want in. I want to do what my buddy's doing." And it just goes from there and it grows. Well, think about LinkedIn, for example. If you have one friend, one connection on LinkedIn, but that connection has 500 connections in their LinkedIn profile, you now have 501 connections. And you can go and look at their connections list, and it's going to say second level connection because you have that one first level connection, but 500 second level connections. And then you can, go and talk to those people, assuming they accept your request to communicate with them. Private lending and money works just the same way. If I have one lender, that's it. All I need is one lender, and I've done a couple of deals with him, and he's made a lot of money, has never lost rent. He's going to tell his network, or you can ask him, say, "Hey, who do you know that might be interested in doing the same thing that you're doing? I'm looking to grow and scale, and I know that I can only do one deal with you. I'd like to do two deals at a time, one with you and one with one of your friends. Who do you know that might be interested in getting in on this?"
Anything else that you recommend for raising capital?
So it has to do with a confidence.
Yeah.
If I were to approach you and say, "Hi, I'd like to have some money," you're not going to take me very seriously. But if I walk up and say, "Hi, my name's Ben. I raise private capital for real estate investments," that's going to pique your interest. You have got, I hate the phrase "fake it till you make it" because you should never fake it. When I got my first private lender, I told him he was my first private lender. I said, "Look, this is what I want to do. I've got the knowledge, the skills, and the abilities to go make you money. This is what I want to do. Are you interested in coming along on this journey with me?" And the fact that I was humble, yet still credible, was what got him on board with, and we've been going like gangbusters for 3 years now. His money is just always deployed. And he's actually brought me two other guys that wanted to get in on it, and their money's deployed. So it just has to do with a confidence. But if you are still searching that first one, then admit it. Just tell, show him the other ways that you're going to make up for that person being the first one. Mm-hmm.
Somebody may be interested in working with you, Ben, and say, hey, I see that you're very effective, that you're growing, that you're evolving. Can I come on board with you and help you raise money? And then maybe you can create a relationship that way. And the same goes for people and investors all over the country. If you're wanting to get into investments and wanting to get into real estate, but don't know how, the best thing, the fastest way, the shortest route, and the path with least resistance is going to be to go partner with some people that have a track record. That's my recommendation.
Fact.
Yeah.
That's absolute truth right there.
So you don't do social media. You have some great tools. Your properties are all the deals in your portfolio. Are they ones that you're keeping forever, or are your investors wanting to sell them and do something else with them? How do you work that out with them? Do they have the same vision as you?
So our private lenders are only involved in that for 4 to 6 months. We use their private money so that we can close in 7 days. I got somebody who absolutely needs to sell. We close 7 days, they get cash now, and my private lender gets a mortgage. If we're going to keep that property in the portfolio as a rental, then we're going to, in 4 to 6 months, we're going to refinance it out with permanent financing so that the private lender has that money back in his account and is able to, and then, plus the interest that is owed. If we're talking longer term involvement, then it's a different kind of loan. It's not necessarily we're just using your money and paying you an interest rate. Then we're going to talk about joint venture partnerships. We're going to talk about partners actually forming an LLC together, and that kind of gets a little bit muddy. So for right now, our private lenders are only into a deal 4 to 6 months max.
Very cool. Well, your portfolio seems like it's growing, and now that you're getting into multifamily and doing some good things, I love hearing your story. I love hearing the mindset of where and why you want to get into multifamily, and it's exciting to speak to people like you. So I want to thank you for coming on the show, but I want to also give you an opportunity to give the audience your contact information and where they can find you. What's your preferred method of contact?
Sure. They can reach out to me via email at Ben, that's BEN, at propertyrxllc.com, and we'll go from there. Just shoot me an email, and if we need to, we can set up a phone call or, a meet and greet. But yeah, just Ben at propertyrxllc.com. I did not get to where I am by myself, and it is incumbent upon the people that once you get to the top of the mountain, which I'm nowhere near, you help pull people up to be there with you. It doesn't have to be lonely at the top.
Thanks again for being in the Air Force and taking care of us in regards to the country, man. We thrive as a nation because of people like you. So thanks again.